Okay, the master trader is back again with another interesting video. I'm so excited today, guys. Just say wow. That's the only thing that you have to say right now. It's just a wow, because what you're about to learn right now, it will have a huge impact on the way you view the market, on the way you trade, on the way you do things when you are trading. We're basically going to talk about liquidity today. We are going to talk about liquidity and how we can get started trading liquidity like the banks. So let's get started. The big question, as always, what is liquidity? That's a big question that we always ask ourselves when we are getting started with the topic. So this is an area of many orders by literal traders. Literal traders is us. We are not banks. We are people. These are people trading in the financial market. These are literal traders. These orders can be taken. These orders can be take profits. So these liquidity orders can be take profits, stop losses, sell pending orders, buy pending orders. So I want you to take note of this. These liquidity orders that we are talking about, or liquidity, can be in form of what? Take profits, stop losses, sell pending orders, buy pending orders. Big institutions take advantage of such areas by fooling both sellers and buyers by taking price to a certain level before eventually taking it to the opposite side. I want you to get this point. It's very important. Big institutions, these are banks, guys. When you're trading in the financial market, they are big institutional traders like banks, big organizations, non-government organizations that have put billions and trillions of money. So what they do is this: when they are in the market, their only thing they do is to do what? Is to take advantage over us, the literal traders, so that they can do what? They can fool us by stealing our money from us, by doing what? By fooling both what? Sellers and buyers. In the market, there are only two people. It's either you are a seller or you are a buyer. It's either you are buying or you are selling. So them, they come to actually do what? To fool both of us. So they can do what? They can eventually take the money from us. So that's the thing. So that's the take-home point from there. How best to look at liquidity? I want you to start looking at liquidity like I look at liquidity. That's the thing that I want you to start looking at it. Not like you used to look at the market. You should start looking at liquidity the way I do it. A trader who only trades based on support and resistance may not understand why sometimes a double bottom looks as though it has been violated and later price falls down. I want you to get this point. A lot of traders, maybe even you have been in a situation where you said, okay, here we are seeing a double top. On top there we are seeing a double top, but you enter the market, then it's violated. But later on, after hitting your your stop loss, then you see the price has started going in my direction after you're already out of the market. No, I think I just need more money in order for me to trade. No, you don't even need more money. You're just losing money. You don't need more money. What you need is this: the knowledge, the skill. That's what you need. You can even trade starting with 10 USD, 20 USD, and grow that account. So that's the secret behind all this. Let us look at this example below. So this is how the market moves, right? So this market is moving in an uptrend. It reaches a resistance, it comes down, it reaches the resistance again, making what we are calling a double top, like most traders look at it. After they mixed this, they see price coming up again, then they'll be like, It is now forming a triple top. It is now forming a triple top. We are going down. Most people will be like, I'm just waiting. At the moment they will see this price here, some people will be like, let me just go down. And some foolish people that didn't, sorry for saying this, some foolish people that didn't watch the previous video concerning IFCs, they will draw this as an IFC zone, not knowing that in the IFC zone we said what, guys? We said, I'm really sorry for using that foolish thing, but after all, even Jesus used it to some people that were acting as if they were acting ignorant actually about the scriptures. Then he said, in fact, this is not a Bible session, let's continue with what we were saying. I'm really sorry about using that word. I don't usually do that. I'm really sorry, but it's just foolish for somebody to actually draw here or mark out the IFC zone after my explanation last time. You don't do that. You don't do that. So the thing is that for an IFC candle, we said it should break the previous here. Yes, if it breaks here, it reaches somewhere there, it comes here, you can draw your, or you mark your IFC zone. From there you go with the market. We said so, but we didn't say that if it doesn't break the previous low, you don't do that, people. You don't. You use liquidity. You use what? Liquidity, guys. You use liquidity. So the thing is that when the market comes like this, boom, when it reaches this zone, most people make their orders. They will sell here. Sellers go in. They will go short here. What is going short? I've already explained. Going selling in the market is going short. So they will go short here. They will sell from here. They will make orders, and their stop loss will be where? It will be there. Stop loss for sellers just above the zone which they have marked. They don't know. That's the main reason they lose money. Yes, they are only having the $10 or the $20. Then they just mark this zone here, this resistance zone. They are very happy. The market is about to start going here on my way. They make orders from here, not knowing that here is an area. This area, they say, them they are seeing it as a resistance. You are seeing it as an area of liquidity. So if you see this area, you will be seeing it like the banks are seeing. Banks will be seeing money here, guys. Money jumping all around this zone. So what banks will do is like, okay, these chaps, they don't know that we are here to make money. So what are they going to do? Okay, from the picture above, many traders will go short immediately. They see price reaching the equal highs, and they put their stop losses just slightly above the equal highs as illustrated by the picture above. So they will put their stop losses there. They'll enter from here. They'll be seeing this to be a what? A triple top. Yes. Let's now go deeper side, papa. Yeah. On the other side, we have the literal traders that await price to break that level and lead the bullish momentum as shown in the price below. I'll show you. Catch this point. I'm going to explain it very soon. On the other side, we have literal traders, other traders like that. On the other side, look, as we are seeing that here we have a triple bottom, we sell here. We have other traders who are like us that are looking it from another perspective. They are looking it from which perspective? Maybe they have drawn their support here zone. They are thinking this is a rectangle wedge. It will actually break out, have a retest, then go up. You see, as we are seeing it to go down, then they are seeing that it will break this zone. This will be a support zone, then it will go up. See what happens. This is so funny in the market. Okay, where did okay, these literal traders place their buy stops. What is a buy stop? A buy stop is an order. I think I have explained this before. When the market is going up like this, if you make a buy stop from here, it simply means when the market reaches that your level, it passes that your level. When it comes to retest, the moment there is a retest, the moment price gets back to that zone that you made that buy stop, automatically the market enters the trades that you ordered. So that's the thing. I'll explain more. Okay, these retro traders place their buy stop just slightly above the resistance zone and put their stop losses a few pips below the resistance as shown below. So look guys, what they do, these ones, they are not looking the market the way we are looking it from. As we are seeing a triple bottom about to be formed, them what they are seeing is a wedge. They have drawn a support here. Them they are looking for the market to actually break out, then have a retest in the zone, then it goes up. So what they are going to do is that they want to buy from here. No, now they are maybe busy, or they are not really interested in looking at charts throughout. So what they will do, they will make orders in advance, and they will put their stop loss just slightly below this same zone of resistance which they have drawn here. They will put this is so funny, they will put their stop losses here, and they will make their buy stops here. The moment the market, they are waiting for the market to pass through. The moment it comes down, like in form of a retest, it automatically triggers their buy orders. They are in the market. So the moment price will start going down like this, there will be negatives as well. So by the time the market is reaching this area, don't forget there are people that have already bought from here, sales. They are already negatives. Some of them, their stop losses have already been taken off. Like it has already hit their stop loss. They are crying now, but some are crying. By the time it reaches here, they'll be like, they'll be like, okay, it has reached that. The moment it tests, it makes them enter, and it will eventually go down. It will hit their stop loss as well. They will lose. So both sellers and buyers in this scenario lose money. They all lose money, guys. So you don't trade here, you just watch. You just watch. I'm teaching you how to wait and relax and watch as people are losing money. So in the end, we have a situation like the picture below. I'll show you. The picture shows both the people going short and those who have already set their buy stop orders. This is the scenario that I'm talking about. When the market is moving like this, guys, it reaches this zone, people sell from here that is going down. They sell because they are seeing a triple bottom being formed. They will sell from here, and their stop loss will be here. And some people be like, no, this market will pull through this resistance. It will become a support. So the market, they will put their buy stop orders here, and their buy stop order stop loss will be down here. So the market will come like this. It will actually, when it reaches here, it will put these guys in losses that are in sales. They will be in massive losses. It will hit their stop loss. They will be out of the market. It will make sure that these guys that are in buys, they will enter the market. The moment they enter the market, it will actually come now way down. It will go down to hit their stop losses, so that they can both lose money. But us, we will never lose money, because we are learning about this area of liquidity. So the zone between the green line, which is the buy stop, and the red line, stop loss or for buy stops, is what we are. It is what we are calling the liquidity zone. Yeah, it's what we're calling the liquidity. This is the area shaded below. Okay, so this zone here, the explanation here, this zone here, the green one and the red one, this zone is what we are calling the liquidity zone. This is the concept here. Yes, so this is a concept of what I'm talking about. So this whole area, yeah, this whole area is what I'm saying to be a liquidity zone area. So this is where people lose money. This is where banks take advantage of people's money, people. Yeah, so that's the thing. Okay, let us now see how the banks make all the retail traders at that zone lose their money. So when price is making a double top at a resistance, retail traders see this as a sign to short, which in most cases, however, a majority of the retail traders enter the market too early. They enter the market too early. Price takes out the equal highs, triggering the stop losses on early sellers. So price will make sure that it will take out these guys, it will hit their stop loss. Once the sellers are out, the buy stops for the other retail traders will be triggered to pick up liquidity. They will, after the sellers are out of the market, they are out completely, they are out, they have lost their money. What they will do is this: they will make sure that they will trigger their buy stops. For those guys who have made buy stops, before they know it, the banks again takes price down and eventually hits their stop losses. And those who thought it was a breakout, so those who thought it was a breakout, the market is actually going up. Those who thought the market will actually retest and to go that, they will also lose the money, guys. Similarly applies in the opposite scenario, the double top. Ensure that you all know that what we are talking about here, it can also happen the opposite side, but I'm talking about it in a selling kind of situation. Yeah, but it's the same. It can happen even on the downside. Let's dig deep and see it on a picture. So here is what I'm talking about. This is what happens, guys. The market will move like that. Pa 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 pa. Here, guys. Other sellers, retail traders will sell from there. They will go short, like we are explaining. Their stop losses will be, the market will make them lose money. They'll go in negativity to hit their stop loss. They'll be out of the market. They'll be crying, whilst these other buyers will be like, I said the market is going up. The market will actually go up. The moment it goes up, it will start retest. It will trigger their entry positions, because the moment it passes like that, it will not still enter, like it won't trigger them. The moment it starts coming down to retest, it will trigger their buy orders. The moment it triggers their buy orders, their buy stop orders, stop loss is just there. Then the market will go down, it will hit their stop loss. So both been losses. So both buyers and sellers will be losses. That's the main reason 95% of traders, they lose money, because this happens every time in the market. This is what happens every time in the market. Okay, liquidity in the market. The picture below shows equal highs marked 1, 2, 3. Let me show you now from a pictorial kind of view in the market, one of the market that I traded here. I usually take screenshots when trading, yes, so that I can easily teach you like this. Here it was crash. I can remember this was crash 1000. It was moving like this, the price. Then it made one retest, a test, then it made two. There, you seen what I'm saying? It made a double bottom, right? This was the first one, this is the second one. Then the price moved like that. Then the moment it reached here, people saw it to be a triple top that is being formed. So what people started doing is they started selling from here. They started selling from here, and their stop loss was just slightly there. But I want you to see what happened. Look at the picture above. This same picture. A support and a resistance trader will be willing to sell out 0.3. A support and resistance. Here they have drawn their resistance. They already know support and resistance. They have drawn their resistance there. They'll be willing to sell from this point because of that knowledge. On the other side, other traders will will put their stop loss just just above on the other side. Other traders will put their buy stop just above 0.3. On the other side, there will be some people that will put buy stops here, thinking the market will just come have a retest there, then it goes up. Like I was explaining. So some people put their buy stops here. They will order in advance before the market reaches there. They will order and they will put their stop loss just slightly there. Yes. Let us see how price reacted. See how price reacted, guys. Here, what happened is that it made a double. Top. Then it went like that. Here, guys, I want you to focus on here. People entered from here. They entered from here. You see, sold. They sold here, sold here. There were some people that this was a daily time frame, guys. This was a daily time frame. So this was one day. This candle was one day. This is a lot of money. A lot of money. You can't be willing to risk all this. You can't be willing to risk all this. So what happened is that people, the moment it reached that zone, they entered from there. They entered to press their trades, press their trades, press their trades. They are selling trades, and their stop loss was just slightly above this zone here. Okay, they drew like a zone there, touching the wick of the second, like we explained in support and resistance. Then they entered, and their stop loss was just slightly there. And there were some people that entered buy stop orders from there, thinking the market would just retest and make this to be what? A support before it can actually go up. So what happened is that the banks moved in with this pin bar candle. They moved in. The moment they moved in, and this is a true confirmation to say that if you see an armor, a pin bar, an evening star, it's a sure sign to say that this is liquidity happening in the market. If you usually see this candle, if you have already done candles, you know what I'm talking about. If you have watched the video about candles. So what will happen is that this will push. They will now push price to actually hit the stop losses of these guys who are in buys. So first and foremost, the sellers will enter from there. The stop loss will be there. It will hit their stop loss. Then it will go up there, make the buyers enter the market. Then it will come eventually hit their what? It will hit their stop loss. Then it will go down. So as we will not enter the market from either these points, we will not. We will not risk our lives like that. We are so precious, we can't risk our lives like that. So as we are only going to enter, if we see, I'm going to show you how you can enter this trade. Let's continue. Price first took out the sellers, yes, and triggered the buy stops for the other retro traders, and then fell down massively. Okay, how to trade based on liquidity. So look, guys, there will be no answers of why we should learn this topic if we don't know how to enter this market. Then why are we learning if we can't enter the market? Like I'm saying that we don't trade such, we don't enter, there will be no use. Now this is a use. There will be where you're going to enter the market from. Don't worry, let's go into it. First of all, mark out the high and the low of the candle that took out the sellers. Stop and candle. The stop and candle. This zone becomes your selling zone. What I mean is, mark out this candle. Identify this candle. The stop and candle. The stop and candle. Mark it out. I think I marked out for you. Yes, you see what I did? I marked the high of this candle and I marked the low of this candle. I marked the high of this candle. I marked even the low of this candle. Okay, Wait for the price to come and retest it, then enter. So here guys, after marking here, we mark out, let me just show you, we mark out here, we mark out our lower part, we wait for price to take them out, we wait for this confusion to end in the market, we wait for price to take them out, then we wait for what, we wait for our for our marked low for the market to enter. You see, right? So we wait for the market to come and retest here guys. So it's not always that the market will actually just retest it. The market can even slightly go 50% of the candle before it can actually go down here. So you start selling from here guys, but your stop loss should always be slightly few pips above this same unstop candle. Okay, let us look on this chart. So I've explained this. What I mean is this: you marked this zone, right? This will be your selling zone. You see, the market will be moving. Oh, it will move like that. It will move like that. The moment it reaches there, you start entering. Some people are already frustrated here. They can't even enter the market. This is where you enter together with the banks. The banks enter from this point, guys. You enter from here. You enter. Your stop loss will be just there. Okay. Marking entry loss. I want you, after you mark, then how do you enter this kind of a market? You can either set a pending order just on top of the stop and candle. So you can press an order just immediately here. You place orders. The moment you see this, you have already marked this. This has not yet happened in the market, but you already mark this. You even make your orders from here. Your sell one will be here. Your sell one will be here. So you can also set another pending order just at the middle point of the low and high of the stop and candle. So you just measure 50% of this candle, you make your sell to, you make more sales. So some people be like, you Gideon, you entered from here but you are in losses, but you're still entering more trades. It's because I understand that this is my sell one and this will be my sell two, and my stop loss will just be up there. So this is what I'm talking about. This will be my sell one and this will be my sell two. But in this case, this, when I was trading this market, it did not reach my sell two. But in most cases, it reaches sometimes the sell two. So you maximize it. So you make more orders from here, you make more orders from there, then your stop loss will just be slightly there. So you enter from here and you eventually go down with the market. Wow. See the thing that you have learned, guys. See the things that you have learned. Then you tell me that you want to be a profitable trader. And you are not serious. You are not serious. There's nothing that we can do. You are not meant to be to be a trader. So okay, think about it. How many times have you been trapped or took a loss from a setup similar to this one or this scenario? How many times have you actually lost your money like that? I believe a lot of times, but you have now the knowledge. It happens to retro traders over and over again because they do not understand the reason behind the setups. It was happening to you because you never understood what I've just taught you. Most retro traders are taught to buy a double top or even a triple top, triple bottom, and sell bottoms. Those are the things that most retro traders are taught. Now that you understand these patterns and how market makers use them, you will be able to see these manipulated moves occur and then enter the market after the manipulation. After the manipulation is complete and you have confirmed to enter the market. I believe you understand what I mean here. You only enter after the manipulation is complete. You don't enter when the manipulation is still ongoing. Yes, and already after the market has confirmed where you enter from. Yes, you mark out your stop and candle just like I've shown you. Take note. This principle is effective on higher time frames and if taken on lower time frames, ensure you do not stay in the market for a long time. I have a lot of students that are, no, I followed the liquidity. Oh, which time frame did you use? So ensure that you understand that liquidity is more effective on higher time frames, and if you're using it on lower time frames, yes, you can use it, but don't spend a lot of hours and time in the market. Price may or may not always come back to the zone, but if it comes back, you know what to do. So liquidity may not always happen in the market, but if it happens, guys, you know what to do. We have learned liquidity. You know what to do. We enter together with the banks. So that's the thing. Trust me, the entries are top notch. Your granny will be proud of you. He will definitely be proud of you because you'll be rich. Thank you so much, and this marks the end of this liquidity topic. What do we do at Trading Billions Academy? We go to the charts, we mark the charts out, we do the practice, and we make the money. So thank you so much, and see you in the next video. Love you so much, and take care.